Good afternoon, everybody. Welcome back for another OSOK FOMC edition. How's everybody's week going so far? Been pretty crappy action, at least on the indices so far this week. How's everyone doing? You guys break even? You up? You down? What's everyone done so far for the week? Okay, not bad. No trades, yeah. I don't know if you guys are strictly indice traders. I honestly haven't. In the last 6 months, I mean, I might have taken a handful of indice trades. I've really been trading gold and currencies a lot. Up 11R for the week. There you go. That's good. What assets are you trading there, Eric? I took a trade on gold last night. Asia gold's been pretty good. Yep. GC and currencies, yeah, man. It's those are some good markets right now, especially when the dollar's moving. When the dollar's consolidating, it's hard to trade the currencies. But yeah, definitely. When the dollar is expanding, you can get some good currency trades. Yeah, I took a nice little win on gold last night. It was just daily, hourly, just a simple hourly chart. Didn't even need to drop down any further than that. Yeah, smooth move. I would imagine a lot of people have been getting chopped up on the indices. Yeah, for sure. Yeah, so today, guys, FOMC is definitely one of the. In fact, if you guys have been around OSOC for any quite time now, for a little while, I honestly haven't. I mean, this is only my only second FOMC that I've streamed in probably four months, 5 months. Just because it hasn't been that great. And what it boils down to are these numbers right here. It's the average high low, and then the points needed to pass in addition to the points needed to pass plus the pad. So if on FOMC the average high low is only 38.4 for a 50K account with Apex, in total you need on average 35 points to pass plus the pad size, which is a 20-point pad. Now if we put that into comparison of like say a 50K or 250K Apex account, even though it has a higher contract allocation, the passing rate is significantly worse. So, and that's because your points needed to pass plus the pad is it's higher than the average move. Compared that to like CPI, where the average move on CPI is 97 points. So, for those larger accounts, CPI and NFP are definitely better. When it comes to FOMC, you really need to have an account that doesn't have a high risk to passing, or RTP as I call it, ratio. So, for example, a 50K Apex account, the risk to passing is like just over 1. It's like 1.15 or something like that, because the total risk is what, $2,500 drawdown, and the passing target is 2,500. Whereas a 250K account, the drawdown 6,500 to pass 15,000. So it really just depends on the account that you're going to attempt with. For me today, I'm only looking to attempt a 50K Apex account with a 20-point pad, and that gives us a 90% passing rate. It also has a low no trade rate. So there's 1, 2, 3, so four. So four no trades over the last year, a little over a year and a half or so, almost 2 years. And that just means when price doesn't move far enough in either direction to actually trigger an order because of the size of the pad. So for sure. Is it possible a 1,500 with 2 contracts? Not sure. Let's take a look. I'm gonna have to say no. You would need, even with a 7-point pad, and 7-point pads, you don't really want to do a 7-point pad. That's a 33% passing rate. So no, I'm gonna have to say no. That one's not going to be any good. So, oh guys, and if you want to get this own OSOK data sheet, you can do that. There's 20% off if you use the code Day Trading Realtor. It's $49 for lifetime access to this, guys. Link is in the description above here on the in this chat. And there you go. So let's take a look here. Who is new and does not know how to actually place the orders for OSOK? Anybody new that does not know how to place the orders? Okay, quick. Okay. We have Robert in the house as well. Good morning, sir. Good afternoon. You know how to do it? Okay, that's good. You watch some of my videos? Yep. Mm-hmm. Promo. I reforce promo for what? Hello, futures trader. So you can do it on Tradeovate if they allow you to place sell stops and buy stops at the same time. Yeah, so guys, the promo code for Toodegrees, as you know, that Toodegrees has been for a long time run a blanket 20% off all of their tools for any actual verified affiliates, which I'm one of them. That goes away at the end of this month. They are no longer going to be doing a blanket 20% off. So if there's any Toodegrees tools that you guys have wanted to get, whether it's their Elite Bundle package, which is all their tools, whether it's the TTFM indicator, whether it's the IFEG indicator, the Forever model, the AR Levels Pro, the Stat Map, whatever tool of theirs that you want to get, now's your chance to get 20% off. And if you get it now, as long as you keep your subscription, you will continue to get the 20% off. After October 31st, they are no longer going to be offering a blanket 20% off for any of those tools. So if you guys did want to get one of those tools, the link is toodegrees.daytradingrealtor.com. Use the code DayTradingRealtor and you will get 20% off for as long as you have those tools. So I highly suggest you guys take advantage of that before that prop, they go away with that promo. Oh, good. You got the yearly suite for the Elite package? Yeah. All right. So Miguel, for today specifically, I am running a 50K Apex account. That's the best one. So Turin Gold, 1,000 passing target, 4 contracts. Yeah, it's a 90% passing rate, 20-point pad, 20 to 22-point pad. So again, I'm rolling with the 50K Apex account, 10 contracts, and it's 20-point pad. Yeah, it's up. Ange Campos, you said what? 4 contracts? Was that is that a Tradeify account? Absolutely, Keith. I can definitely go over my funded account calculator. Yeah, see, guys, Tradeify, was it 4? Is it 4 contracts? Oh, 3 minis or 4? Yeah, so regardless, it doesn't matter. 3 contracts, 4 contracts for a Tradeify, it's going to be a horrible passing rate. I wouldn't even attempt Tradeify on FOMC. So, yeah, I would wait for CPI or NFP if you're trying to pass Tradeify accounts. You really need, see how this says value per point is only $80. You really need something that's above 200, and you also need something that is at least as close to possible a 1-to-1 risk to reward ratio, meaning the full drawdown of a 50K Apex is $2,500, the passing's $3,000. Anything more than that, it's going to be hard just because on average, FOMC does not have enough volatility built into the news event. So, yep. Yeah, 43, King, I was going to go with 43, and I should have just done 43 like I always did. And then somebody, I'm not going to mention their name, jumped on and said, 25-point pad. I'm like, let's do it. And I know better. I've been doing this for a year now, and I know better with CPI. It's always better to have more room for the manipulation than less. And 43-point pad would have been just fine. Yep. Yeah. So, all right. So to place the orders, guys, here's the OSOK indicator. I have a 20-point pad, so the lines are 20 points apart from the current price. The first thing we want to do is go into the settings of your trading view. Here, let me turn this off here. Hold on so you can see it. Yeah, the first thing you want to do is go into the settings of your trading view and you want to turn off one-click trading. And we can place these orders now on the charts. Make sure they are nowhere near price. Make sure they're far enough away from price. And when we're above price, we're going to right click. We're going to go to stop, a buy stop order. Make sure you have your right number of contracts allocated. Mine is 10. That's what I want. I'm going to drag my stop, my take profit to 32.50. So just a little bit past 3,000. And then I'm going to hit buy. And then I'm going to go, again, well enough away so it doesn't trigger us before the actual news event. Below price, we're going to right click, go to sell stop, drag my take profit down to 32.50, and then I'm going to hit sell. Now, once both of these orders are on the charts, that's where we're going to go ahead and go back into the settings of trading view and turn one-click trading back on. This way, when we go drag our orders in place, we don't have to reconfirm and say, yes, I would like to confirm. I haven't said this enough. I used to say this a lot, but once again, everybody, if you can't afford to take the cost of whatever this eval is that you're risking right now and light that money on fire, do not do this. We only do this when evals are cheap and when you can afford to blow that money. This is not something that if the cost of an eval is stressing you, don't do this. Right? Even with the stats behind it, everything, you never know what can happen. We can have slippage. It could be off. Just because we have historical data does not guarantee it's going to be the same going forward. So only attempt this for evaluations. This is not for funded accounts. This is not for cash accounts. And only if you can spare the cost of the eval and don't care about it at all. So Chosen One, it's different. If you want to, again, everybody, I know you like coming on here for free, but guys, I've put a lot of time and effort into this data sheet. It's been a year, over a year in the making, and I created this web at. It's $49, guys. Go buy it, and you have all the data that you need yourself. Lou, so I just do the 5-minute chart. The only reason why I do the 5-minute chart is simply countdown. For OSOK, it literally doesn't matter what time frame chart you're on. I just do it because if I do a 1-minute chart, it only counts down 1 minute. So I've done a 1-minute chart before, and it was like 1:58, and I'm like, oh, here it goes, and it wasn't right. So I do a 5-minute because I know once that 5-minute counts down, I know that's going to be 2 o'clock or 8:30 or whatever. So that's the only reason why I do a 5-minute chart. You can do it on a 15-minute chart. It really doesn't matter what chart is. Now, once the news event's over and I go back to measure the data, I go down to a 1-second chart because I try to get the most accurate data that we can. So we'll see what happens here. Hopefully it gives us a nice one-sided clean move. Again, I think everybody is expecting him to cut the rates by another, quarter point or something like that, maybe 25 basis points. So if he does that, there might not be a huge injection of volatility, but we'll find out. We got about a minute now, guys. Everybody should have the orders on your charts ready to go. Make sure you did have one-click trading turned back on. That way we can hold the shift button down and drag the brackets in place once we're ready to go. And once again, once one side order gets hit, we immediately want to close out the other side, guys. We don't want to leave them both open. We want to close out whatever side did not get hit. You want to close that side out right away. So we'll see what happens. Got about 40 seconds here. And then once we're done, I can go over how to use the funded account calculator, and then I can go over the trade that I took today too, overnight on gold, if you guys want to see that. Awesome. Very good, Juna. Very good. You're very welcome. All right, 15 seconds, guys, here. Let's focus. I'm going to wait till 5 seconds and then move the orders. Here's the first one, and here's the second one. Oh, here we go. Ah. Yeah, nothing happened. That's not good. Yeah. I should have just closed it out immediately. Yeah, that was garbage. See, there wasn't enough volatility today, guys. That was garbage. I should have just closed out immediately. So when there's not an instant move right away, guys, you just want to close them both out. So now it starts to move, but yeah. And this is why I don't like FOMC. This is one of the reasons why I have not streamed FOMC in quite a while. It's not that great a move. When you only average 38 points on average, it's not that great. Yeah. So hopefully everyone closed out. I should have just closed out. I waited and it got wicked myself. So let's go down to a 1 second chart. Let's look at what happened. Yeah. So there's 14-minute. There's 1400 right there. Let's see right here. Yeah. See, I should have just closed out. It was garbage. Yeah. That was trash. Yeah. Lou, listen, I don't blame you. Again, I was giving it a go, see what happened. But yeah, just sticking to CPI and NFP, guys. I know there hasn't been an NFP in a while because of the government shutdown. CPI obviously last week was good, especially if we used the larger pad. Yeah. I don't blame you, Fibonacci. It's not that great. Again, if you go back to my stream of FOMC last month, I had actually mentioned that this was the first FOMC stream that I'd streamed in a while, and it was a good one. And that was simply because it was a very important rate decision, and it was going to be the first cut, and it was the first time since Jackson Hole where they actually had mentioned that they're going to start changing their monetary policy. That was the first FOMC rate decision since then. And yeah, they're not that great. Yeah, they're kind of crap. Yep, it is lackluster. So hopefully you guys close out and nobody got busted out. So it is what it is. But yeah, it is still more than enough. Absolutely Fibonacci. Yeah. I mean, I just do one at a time, and I have over 23 funded accounts strictly from OSOK, and it's taken me a little over a year to get those 23 accounts. So, now that you don't do FC, you just join now. What will happen? Yeah. So, all right. So what would you guys like me to go over first? You want me to go over the trade that I took on gold, or you want me to show how to use how the funded account calculator works? So Maverick, I actually have okay, Keith, we'll go over that. I actually have a specific earnings play that I play. And in fact, I need to put my orders in. Meta's the only one I'm interested in today. I have 4 stocks that I look at: Meta, Tesla, Spotify, and Netflix. And those are the 4 stocks that I will sometimes Microsoft, but the implied volatility. Where's my phone? Hold on. Let me get my phone. Yeah. The implied volatility is not high enough on Microsoft today. I think the implied volatility is only like 76%, and that just doesn't do very much in terms of what I do, because I play broken wing compound butterflies, so it's very similar to what we do here. Yeah, 78% is the implied volatility for Microsoft. Compare that to like Meta. The implied volatility is 110%. So it's a much higher implied volatility. So that's one of the reasons why I like to play those 4 stocks every quarter. And it's a broken wing compound butterfly. And I'm essentially straddling both sides of the market, but I can have it blow out one way or the other and still get wins in. So that's why I like to play those plays. So I need to make sure I get those orders in before it's over. So, all right. So Keith, I guess we'll get to let me just do the gold trade real quick. It's actually pretty simple. All right. So guys, this was the actual trade that I took on gold today. And if anybody knows, I'm a TTFM trader. I do take logic from AM's expansion model sometimes. And I would say that this logic was more of an expansion model logic as far as why I took the trade, but it was a TTFM basically entry. And it all simply starts from the daily level. So I actually missed a short overnight on Tuesday. That's okay. So all I'm looking for every day is I'm looking to see where we are on the daily chart for daily relevant levels. So the reason why I was looking for a short overnight on Tuesday, which I did not get, unfortunately, or maybe it was Monday night going into Tuesday, was the fact that we had Monday's candle reach this relevant daily swing point, and we had a strong close below it. So there was not a manipulation of this low, which tells me we were probably going to go down to the next relevant level on the daily chart, which was this swing low right here. And that's exactly what we did yesterday. Well, as you can see, once we reached that swing low, look how quickly we reacted off of that. And does this candle look like an expansion candle, or does it look like a manipulation candle? What does it look like to you guys? This one right here. Manipulation or expansion candle? I don't care about weekly bissies. I just look at yeah, manipulation. See, you can see how this was an expansion candle that expanded through a low, which means we're probably going to go to the next relevant low. Then from there, we manipulated off of that. So this was really simple for me, guys. So then I go down to the hourly chart, or sorry, from the daily. My next step is I want to see price respect 50% of this wick right here, right? In this situation, I wanted to see price respect 50% of this whole candle, which it did the day before. But in this situation, since it's manipulation, I want to see 50% of this wick respected. So then I go down to the hourly chart and I go, okay, what? Sometimes I go to the 4-hour, but in this instance, I just went down to the hourly because it was clear enough. So what I want to see is around that 50% of the wick, is there any type of relevant levels that price should react from? Well, yes, there was a order block, or what I call an OCB, an opposing candle block. A lot of times people won't consider this an actual order block because it's not the lowest low, right? So this is technically the whole order block for the change in state of delivery here. So this is what I call an opposing candle block. So we had an opposing candle block that was created from yesterday morning. We had an hourly fair value gap, and right before the end of the day, we started to trend towards down that direction. Well, if I am bullish on the day, I want to see price open and go lower first. Well, what happened? The first hourly candle at 6 p.m. opened, went lower, went into the OCB, and we had the body close basically above this fair value gap. So once I saw this hourly candle close above there and change the state of delivery, essentially from this, forget all this leg right here. I know this is the lowest low, but at the same time, this is the manipulation leg, right? So from there, all I'm simply doing is looking for price to continue higher. So I entered on this candle right here. It was at the 8 p.m. candle. And price did go against me for a little bit. It chopped around. I went to sleep in the middle of this candle. It was like right around 1 o'clock when I actually went to sleep. But I was pretty confident just simply because of the fact that price was staying above 50% of this opposing candle block. And sure enough, woke up and there you go. We hit 2R. And I was only looking for this high to be taken. I wasn't worried about any of these other failure swings. I only wanted to go right there, which was, to me, low-hanging fruit. And clearly, as you can see, we had a big reaction off of that high. So that was the trade that I took. So it was simple. Daily, relevant level. We had a manipulation of a low. We had a reaction off of it. Went down to the hourly. Found the structure that I liked, and that was it. Yeah, honestly, I don't really pay attention to fair value gaps that are on the higher time frames. And that's just something that I personally don't care for. There's been way too many times over my journey with ICT where I had a 4-hour or daily fair value gaps that scared me into not wanting to take a trade. And in my mind, like sometimes these daily ranges, when you make a daily fair value gap, are just so big, it just doesn't make sense for it to actually be something valid. So I just don't worry about daily fair value gaps. What I look for the most are opposing candles in swing high and swing lows. At the same time, I would like to see, if I am going to count a fair value gap, I want to see a full close away from it. Preferably up close. What I do care about is shorter time frame fair value gaps, because in my mind, they're more relevant. They're not from a 24 or 23-hour day where anything could happen within that 23-hour period. And then I want to see reaction. So like with this fair value gap, I don't even consider this a fair value gap until price goes into it and then rejects out of it, because it could have just gone right through it, right? So the problem with some of the ICT thing is if you look hard enough and you pay attention to every PD array that you can find when it comes to ICT, you're always going to find a reason not to take a trade. So there comes a point in your trading where you just have to say, I'm not going to worry about those things, because you literally won't take a trade. Because you're like, oh, there's a fair value gap here, there's a fair value gap there, all over the place. So I specifically like opposing candles, which many people call order blocks, and a fair value gap that's created off of that specific opposing order block, just like this one was. So that wasn't important. But again, I didn't put any weight on that until price reached into it and then reacted out of it. So that's just me, though. All right. So any questions about that gold trade? No, FOMC is not at 1430. That's just the news conference. The actual FOMC that we pay attention to is when they drop the news at 2 p.m. for the rate decision. Sure, price can go crazy based on what the Fed says, but there's no specific injection of liquidity into the market at 1430 because it's just the news conference. What happens is at 2 p.m., 1400, that's when the actual Fed rate decision comes out, and when the Fed notes, basically, so his speech of what he's going to say, it's already been printed. It's already out now. So his initial remarks of what he's going to say, everybody already knows them. It's not until he reads those statements that then people are going to ask questions. So do I use any type of order flow tools? Well, I do use the TTFM indicator, and I use the average daily range. But other than that, no, I don't use any tools like that. So let's see here. Let me just go over this other sheet for Keith. He had asked a question about it. So one of the other tools that I have on my website is called the OSOK, the Funded Account Calculator. Keith, you still in here? Just want to make sure he's still here so I can go over it for him. Yeah, Marisung, I can go over that today. Cool, Keith. All right, so OSOK Data Calculator, or sorry, the Funded Account Calculator. One of the things I use this for is because I have 23 different funded accounts that I trade with. I have 50K accounts, I have 150K accounts, and I have 250K accounts. And when I risk on a trade, I use a percentage of my drawdown as my risk. Now, my leader account, per se, in this example, if it's $4,500, that's a 150K Apex or Tradeify account. Well, I might also have a 250K Apex account in my accounts here. And then might also have a 50K Apex or a 150K Tradeify account. So they all have different drawdowns, they all have different balances, and they all have different profit targets. So what the funded account calculator allows me to do is if I want to risk 10%, because I'll risk 7 to 10% of my current drawdown. If I want to risk 10% of my leader account, which if the leader account's $4,500 in drawdown, that means I'm risking $450. Well, if I want to trade that same 10% based on my other accounts, I'm not going to risk $450 on a 50K account. I'm only going to risk $250. So what the funded account calculator does is it does the math for me to give me this important thing right here called the copier ratio, right? So on my leader account, which in this example is 150K Apex or Tradeify account, in order to risk the same amount relative to the other accounts that are my follower accounts, I have to have a different copy ratio. So for example, the 250K Apex account would trade 1.44 times what I'm trading on my leader account, and vice versa. For a 50K account, which is smaller, I'm going to have a copy ratio of 0.56. So it's less that I'm risking in relation to what my leader account is. So this allows me to have all my accounts in here and then I'm able to see what the copy ratio is. And in my specific trade copier, which is the Apex investing trade copier, it's the only trade copier on the market that allows you to do fractional copy ratios. All the other ones make you do 1-to-1, 1-to-2, 1-to-5, 1-to-3, 1-to-4, 1-to-5, and it makes it too hard because you can't get micro level like this to be able to mimic your risk across all your accounts. One of the other cool things that it also does is based on what your risk is, what your win percentage is, and what your R factor is per trade. It will literally tell you how many trades away from a payout you are, and then how many trades to liquidation you have. So, for example, my actual win rate's closer to like 63%. And I do have a 2R factor. It might be a little bit higher 2R factor, but do you notice how that changes the trades to payout and the ratio to trades to liquidation? At a 50% win rate, you're on a 10% risk of drawdown and a 2R factor. It's going to take you 21 trades, but yet only 10 trades to blow your account. So you have to have double the amount of actual trades to get to a payout than you would actually to blow your account. So that means you can blow your account a lot quicker. So then you look at, okay, well, what is a different ratio? Well, you risk even more. Well, now you're risking less, which is okay, but it takes you even longer to get to a payout. You could risk more and say, okay, well, what if I went to 15% risk? Well, ratio's a little better, but now you're dropping down. So all this is just something for you to look at so you can understand where you are in relation to getting to a payout, and how many trades is actually take. Because a lot of people don't actually understand that. The other thing that this tells us is, let's say these are two brand new accounts, right? And these are both Apex accounts with a 10% risk and a 50% win rate and a 2R factor. You're going to reach payouts in the exact same number of trades, 21. However, under the new Apex rules, your minimum payout, unless you go past your minimum payout balance, is only $500. So regardless of what account you have, you're only going to get $500 on your payout. Now, if you have a Tradeify account, depending on whether you buy before their new rule change or after their rule change, those same 21 accounts, for example, 21 trades, for example, if you have a 150K Apex account, which is right here, the ratios, and it's actually 600, you're going to reach payout in 21 trades, just like the other ones. However, your first payout on this account is $2,500 once you reach your minimum. So not all accounts are good. So they already did the rule change. So Tradeify did their rule change. And it's funny because if you see any of their affiliates, I'm actually not an affiliate of Tradeify, although they did actually just contact me today to become an affiliate. So maybe I'll be one, but I'm still going to tell you guys the truth about them. All their big affiliates were like, oh, Tradeify is the best in the world. Let's see, payouts. They're the best in the world. And they have, oh, so good. So this is how, I totally didn't. Here we go. Payout policies. So this is what they snuck in there. So you've probably seen in the last month or so a bunch of people posting about how Apex upped their minimum payouts, right? So they oh, you're going to get more on your payouts. Well, first of all, that's true, but only to a certain extent. Let's see here. So this is the payouts before an account. So if you purchase the account before September 12th, this is what your payouts were, right? So on a 50K account, your first payout's $1,500. 100K account, it's $2,000, and 150K account is $2,500. Well, now if you look on your second payout, they upped it to $2,000. Okay, and then the third payout, they upped it to $2,500. They didn't change that one. And they changed it to your third payout on 150K. They upped it by $400. So they've been saying, hey, guys, you got all this new stuff. Great. You're going to get new higher amounts once you reach your minimum threshold. Not really. However, what they didn't tell you is that the amount needed to reach a payout has significantly increased. So, for example, before on advanced account, on a 50K account, you only had to reach 52,100 for your minimum account balance before you get a payout. Well, now it's 53,000. So that's $900 more, and $900 divided by 2,100. That's a big percentage. That's like 40% more that you have to reach in profits till you can actually get to a payout. So they kind of hit it as like, hey, we got these new rules. You're gonna make more money, and really you don't. And you only make more money if you have a 50K account, 100K account on your second or third payout. And for the 150K accounts, it's not until the third payout where you actually make more money. So, I mean, did it really help? Not really. But they significantly raised percentage wise the amount that you have to reach until you get a payout. So I don't know. You tell me if you think that's better or not. I don't think it is. So, but they're still a good prop firm, and that's that. So, let's see here now. Someone had a question about the average range levels. Do you guys still have a who was that asked about the AR levels? How I use the ADR. In Vega, are you still in here? No. All right. We'll go over my broken wing compound butterfly strategy. I guess the best way to do this is to show you. Let me see what I'm looking at. So we'll go to Meta. I'm gonna have to take screenshots because I do all this stuff from my phone. So let me see if I can just screenshot this and airdrop it to my computer. Hold on one second. Let's see if I can pop this up. All right. So this is what I'm looking at for the broken wing compound butterfly. So it's reporting earnings after market today. And I do this with options. So what I look at here is this is for when I play these broken wing compound butterflies, the whole play is to hold the option, the butterfly, until it expires. So it's going to basically execute in the money or not. And so if you look right here, this is from Schwab or TD Ameritrade, Thinkorswim. They are an actual market maker. So when you trade with brokerages that are actual market makers, you get this thing right here, which they call the MMM, which is the market maker move. So this is like the market maker move for today. This is the market maker move for by the end of the week when these options expire. So this is how this works. I want to see an implied volatility above 100%. Okay, and why do I want to see an implied volatility above 100%? Because that means that as soon as they drop their news, the implied volatility, the theta is going to tank, and that means the price should spike one direction or the other. When it like if we looked at Microsoft right now, their implied volatility is only 78%, so it's a much lower implied volatility, which means it's not going to move as much. But what this number here is telling us is that the market makers expect Meta from its current price of $747.65 to move plus or minus $51 by the time this option expires on Friday. Okay. So that's what I start with. So from there, what I do, and I'll take another screenshot, is I open the option chain and I look for, we'll just go $50 out of the money. So we're going to say, so 747, $50. So we'll go to yeah, let's see if I can get a 795. That'd be $45. Yeah, 795, 800. And I'll post a screenshot just a second so you guys can understand. Okay, so let me grab this screenshot. I'll share it. Like I said, sorry guys, I do all this stuff from my phone. It's much easier than using the Thinkorswim desktop app when I do this stuff. All right, so this is the first side of the broken wing butterfly. Okay, so what I'm doing here is if price is expected to move $50, which is this number right here, for it's 747, I round 748, I round up to 750. $50, that's 800. Okay. I am going to sell two 795s. I'm going to buy one 800 and buy one 785. So this is a butterfly, but it has a broken wing. Okay. So if I draw that for my risk calculator, we'll just draw this right here, so you can kind of understand what this looks like. So here's my risk calculator. There's this, that, and then down, and then over. So this is right here, 795. Oh, you know what? This is the, I did the wrong, that's the put side. Let me do the call side. Sorry, I did the, we'll just do it from here. And forgive my drawings, guys. This is the best I can do with this. I'm not Picasso like T-Trades in his drawings. All right. So this is 795 right there. This is 800 right here. And this is 785 right here. All right. And so the goal is I want to enter, I'm going to do this on both sides. So if we go to, and just I'll bring that screenshot back up so you guys can see it again. Yeah, right here. So there's the call side. So essentially what happens is if price moves and it goes to 795 and it stops here and it expires on Friday at 795, I make $10. Okay, $10 total. If price blows past the 800, doesn't matter how far past it goes. It could go to 805, it could go to 850, it could go to 900. Does not matter. You make $5. That's the spread. Okay. If it stays in the middle, that's where you lose your money. But my cost basis is I want to be in each leg of the option for $1.50 or less. Okay. And again, anybody that knows options, one contract is equivalent to 100 shares. So $150 is my cost basis. So we'll say that's the cost on each leg. Each leg. Okay. That's the cost basis. So you're in for total. Profit here is $10. And profit here is $5. Okay. All right. Now we're going to do the other side. So I'm going to do the same thing. So I'm going to go C750. We're going to go, let's see, we had 795. So we did 45 out of the money. So I'm going to try to get that same ratio on the low end. So we're going to go 710. So 705. 705 with 715. Oh, what's he doing? Hold on. 705, 715, and then 700. Yeah. So let me just screenshot this. Drop this to my computer here. All right. So this is what, nope, that's the wrong one. It's this one right here. So then this is what the put side will look like. So then we have 705 here. 705. Hold on. 700. And 715. So I try to get into these, like I said, for $1. So let's look at what this is. So for this $1, one, there we go. Yeah. So if we look at just one on this side, so for the put side, it's $1.73. So we're gonna go look at the other side and see how much the other side was. So here's the cost basis for this one. It's $1.73 for the put side. So then that means that my call side needs to be cheaper, because if I can't get into this for $3 or less, then I don't execute the trade. So let's go look at the other side again. Let's just look at that. So it was 795. Wait, what was it? Sorry. $800 and 785. Let's see if I can, what the cost basis on that is. $1.48. So here's $1.48. Okay. So right now, I'm not liking this because, and I'll explain why. So here is the other one. All right. So there's our two cost basis. So we have $1.48 and $1.73. Okay. So that means we're in it for more than $3. And why is the $3 important? So I'll break that down. So $1.73 plus $1.48. So we're in it for $3.21. So if we only have one of three outcomes. Okay. So 321. $3.21. Okay. So this is our cost, not of each leg, but total. This is our total cost. So if our total cost for one per contract, right? Then you can risk how many contracts you do. I usually risk about $1,500 each trade, each one of these. Although I did risk $2,500 a couple months ago, and I hit, and it was nice. So if $3.21, which is $321, and let me just do this. Let me get rid of that so you guys can understand a little better. We have one of three outcomes with this play. The first outcome is it reports earnings, it spikes up here, and then by the time Friday comes around, it trickles all the way back down into here, and we lose our total cost of $321. The next option is it spikes up, and by the time it closes right at $795 or closes right at $705. Then we make $1,000 minus the $321 cost. Or the other option is it just blows out one way or the other, whether it blows way out high past 800 or way low below 700. Then we make $500. Well, the reason why I'll try to keep my cost below $300 is I want to make at least 62 or 63%. So if the cost is $3 and you're making 500, that means you're making a $200 profit on a $300 cost, then you're making 66%. If it's any more than that, it's just not worth it to me to actually do this play. So that's essentially how the broken wing will work. Now you can say, okay, well, is there a way I could roll out further one way or another? Well, I could go look at the put side and go, okay, well, since the put side is a little more expensive, what if I were to go down, say, another $2.50? Because I think at that point we're at $2. Let me see. Are we at $2.50 spreads? Let me just look. I think we are. Yeah, we are. So I could go to 702.50 and do 710.50. Do 712.50 and then do 697.50. Okay. Let's look at what that cost basis would be now. No, see, that's $1.68 still. So it's still kind of expensive. So then I can say, okay, well, what if I want to go down another $2? So then at that point I'd go 700 and then 710 and 695. Let's look at that cost basis. And now we're at $1.55. So we're a little closer to the number that I want to be at, but now I then have to look at it and go, okay, so the whole point is if the spread is $50 plus or minus, right now it's $51. If the spread is $51 plus or minus, I'm always going to play for the blowout leg. I've never had it pinned, right? I've never had that pin, unfortunately. It's always just a blowout leg. I've never gotten that $10 win, which would have been nice, but I haven't. That's just like bonus on top. So it usually blows out. So the goal is if I can get this blowout number to be less than the expected move, then I'm actually ahead of the game. That means price doesn't have to move as far as the market makers expect it to move in order for me to hit my blowout leg. So the way it's looking right now, I don't think I'm going to play meta today. So, and that's my broken wing compound butterfly play. So you guys have any questions on that? Did I lose everybody on that? Well, good. Hopefully, for those who understand options and understand how to play butterflies and stuff, I hope I explain it to where you can understand it. I know for those who have no idea about options are probably like, what the heck did he just explain to me? So hopefully I explained in the way that you guys can understand it. All right, very good. I think that's it then, guys. Unless you guys have any other questions about how I trade or OSOK or the funded account calculator or my earnings play. Cool, Keith. Do you guys play options? Have you played butterflies and or broken wing butterflies before to fully understand how that works? Nice. Yeah, I used to play Iron Condors a lot too. Lost my ass pretty bad on some zero DTE SPX. Yeah, I still Tradeify. Yep, I do. But like I said, I have 23 funded accounts. Most of them are Apex accounts. Some are also, yeah, yeah. So Keith, the one thing I can say about options, yeah, zero TDE, you're crazy. And not only I was selling zero DTE, I wasn't just buying, I was selling. So when you sell, like when you buy any option, you know your cost going into it. Well, when you sell, it's not that you have an unlimited downside, but it's a much greater risk because you're selling the risk side of it. You're not buying the risk side of it. And the unfortunate thing is, like with Iron Condors, especially if you're playing weekly Iron Condors, what I used to do is I would sell an Iron Condor. I liked Microsoft or MasterCard a lot because they kind of stayed within a range. I would sell the Iron Condor on, I would always do like 25 delta or less. So I'd look for my wings on my Iron Condor to be 25 delta or less. I would sell on a Friday. And then if I could close out for a 50% credit base or buy back from myself, basically at a 50% reduction of the credit that I received by like Tuesday or Wednesday, then it was great. No, I haven't had any issues with payouts from Apex. I'm still waiting to get one of those emails. I have not gotten one of those emails yet. So hopefully I never do, but I have not gotten one. And I have a theory on that. I do feel that Apex tends to favor their affiliates more than regular traders. I can't say that's, I don't know for sure, but out of the people that I know that have received, oh, hey, Dixie just hit a level I was looking for. Out of the people that I know that have received those emails, the majority of them are not affiliates. And for the people that I know that haven't received those emails, they're affiliates. So I don't know. I don't know if there's anything to that. But I have not received one and I haven't had any issues. So we'll see about that. But yeah, for the zero DTE, the problem with them is that unlike a weekly option, if an Iron Condor goes against you, you can roll out like the beauty of weekly Iron Condors, for example, is let's say you have an Iron Condor that looks like this, right? Right. So let's say this is your Iron Condor, okay? And let's say you sell it prices like right here, okay? Oh yeah, but see, Zeus, that they've been asking people to do that for over a year now. Like this, that's nothing new. They've been doing that for a while. So let's say you have an Iron Condor and you want price to stay in that range, right? And price is just bouncing back and forth, and you have a whole week to do this. Well, let's say price starts to go against you, and it's not expiration yet, right? So this is your max loss on either side of these. Well, unlike zero DTE, you have a chance to defend that position. So, for example, if price goes against you and it goes past your bullish leg, all you have to do is close this leg out. You're going to lose money, right? You will lose money closing this leg. Let's say you collected $10 in premium total for this Iron Condor, okay? And it costs you $4 of premium to buy that back from yourself. Well, now you're only making $6 of premium. You can literally raise this leg up and say, okay, well, I'm going to defend this position, and now I'm going to move my new bullish leg up to here, right? You'll lose money on it, but you'll close out the bearish side, the put side, and then resell another put closer to the money, which is then going to actually recoup some of the money that you lost. So originally that iron condor might have been paying you $10 a contract. You had to close it out for say $4 a contract. So now you're only down to making $6 a contract, but by closing the other leg out and moving it up, now you're getting $2 more. So now you're making $8 as opposed to $10, right? So that's the beauty of the iron condors when you have like weekly expirations. When you have those 0 DTEs, like once 1 o'clock, 2 o'clock hits, like there's no theta left for you to protect yourself, and you can lose money real quick. I lost like $7,800 in a day trading of real cash, trading 0 DTE iron condors on the SPX. It was not fun. And I just happened to be in a board meeting of one of my actual companies, and there was literally nothing I could do. Like I couldn't focus. I couldn't talk about the other business. My partners were like asking me questions, and I totally was just like ignoring them because I'm just staring at my phone going, oh man, I'm going to take a max loss on this. Like there's no way to protect it. Nothing I could do. I was just going to be out almost 8K in a matter of hours. Yeah, and it sucked. So I don't like 0 DTE anymore. But that's it, guys. If you guys have any other questions, feel free to drop in the chat real quick. If not, I'm going to pop off. Yeah. Maris, I feel like everybody has one of those stories playing 0 DTEs for sure. All right, guys. Well, that OSOK sucked as I thought it would. Just not enough volatility in FOMC. I don't think I'm going to be streaming FOMC again going forward, unless it's something super important. But yeah, I'll probably pass on streaming FOMC, guys. So we don't need to have some garbage action like that. So yeah, you're welcome, Keith. Anytime. I actually might start streaming, guys, some live trading. The problem is I've been liking Asia session a lot, trading Asia. So I don't know if I really want to stream Asia, but I'm not the biggest fan of New York session recently. It's not been the greatest for sure. At least not on the indices. It's been pretty crap on the indices. I've been finding comfort trading Asia and just waking up to either a losing or a winning trade. But all right, that's it for me today, guys. Hope everyone enjoyed. I know we got a few people still on here, so thanks for everyone that stuck around. And as always, risk properly, stay safe, and happy trading.